let's talk about just how powerful a single announcement can be in the world of finance. It's a fascinating story about a big tech company, a super important stock market index, and the shockwave that happens when those two things collide. So picture this. The market's closed for the day, everything's quiet. But then, all of a sudden, shares of the flash storage company Sandisk just leap up by 7%. So what's going on here? Did they announce some kind of revolutionary new gadget, a massive surprise profit?
Nope, it was something else entirely. It was kind of like getting a promotion, getting called up to the big leagues of the business world. And yeah, it was all thanks to one single piece of news.
And that announcement is what this is all about. It's what we're calling the S&P 500 shuffle. This is the moment a brand new player steps onto the field to join the majors. So here's the news that dropped. On November 28th, Sandisk will officially be added to the prestigious S&P 500 index. This right here, this is the announcement that sent that stock soaring by 7%. But here's the deal with the S&P 500. It's a very exclusive club. It has exactly 500 members, no more, no less. So for a new company to get in, somebody's got to leave. And in this case, Sandisk is taking the spot that used to belong to a marketing company called Interpublic Group. Okay, so a company gets added to a list, and its stock price jumps. But why? Why is this such a big deal? Well, it all comes down to something Wall Street traders call the S&P effect. But before we can really dig into that effect, let's just make sure we're all on the same page. What exactly is the S&P 500? You hear about it on the news all the time, but what is it really?
Basically, you can think of it as a giant report card for the U.S. economy. It's a stock market index that tracks the performance of 500 of the absolute biggest, most influential companies in America. So if you want to know how the economy's doing, the S&P 500 is one of the first places you look.
And because it's such a critical benchmark, getting added to this exclusive club is way more than just a nice pat on the back. It triggers a very real, almost automatic, and pretty powerful effect on that company's stock. And this is that S&P effect broken down. It's pretty simple. First, you get the announcement. Second, and this is the absolute key, there are trillions, and I mean trillions, of dollars in what are called index funds. Their only job is to own the exact same stocks that are in the S&P 500. So when Sandisk gets added, all of those funds have to go out and buy Sandisk shares. And that leads to step 3, this huge, sudden flood of demand that just forces the stock price to go up. All right, so we've got the what and the why down. Now, let's talk about the who. Because this isn't just numbers on a screen. It's really a tale of two very different companies headed in two very different directions. So coming into the ring, we've got Sandisk. They're a $33 billion tech company that makes flash storage. And heading for the exit is Interpublic, a marketing firm that's leaving because it's in the process of being bought out. So you've got one rising up as an independent force while the other is kind of getting absorbed into something else. Sandisk's journey to get here is actually pretty wild. It used to be part of another company, Western Digital, which bought it back in 2016. But just 9 months ago, Western Digital spun it back out to be its own independent company again. And now, less than a year after being reborn, it's joining the S&P 500. That's an incredibly fast turnaround. And it's not a random choice either. The company's performance has been really strong. Sandisk is the one making that super fast storage that powers everything from our gaming computers to massive data centers. Its revenue jumped 23% last quarter, and maybe even more impressively, the actual amount of storage they sold, they measured it in exabytes, was up a whopping 31%. So what about the other side of this whole shuffle? Well, that spot in the index opened up because Interpublic is being acquired by its competitor, Omnicom. And once that deal closes, Interpublic just won't exist as its own company anymore, which means, you guessed it, it's no longer eligible to be in the index. You know, this one little swap isn't just some isolated event. It's really a sign of the times. It's part of a much bigger trend that's reshaping our entire economy, the unstoppable rise of tech. This quote from the source material just hits the nail on the head. The S&P 500, our big economic report card, is getting more and more of its value from companies that are built on technology. You know, things like software, the internet, and all the little chips that make everything run.
And look, Sandisk is just the latest example of this tech takeover. Just this year, companies like AppLovin, Datadog, DoorDash, and Robinhood have also joined the index. You can see the pattern, right? The old guard is slowly making way for the new guard of data, software, and digital services.
So at the end of the day, this isn't just a story about one company's stock having a good day. It's a snapshot of our entire economy in the middle of a huge transformation. And it leaves us with a really interesting question to think about.
As technology keeps changing our world, who's going to be the next one to get called up to the S&P 500?